Hey guys, thanks for happening upon my channel. I typically do blockchain and altcoin videos, but this time with GME Gamestop requires a special video, especially with Tomash and a bunch of other leaders in my space that are on everyone's lips talking about it and them tweeting about it and making such a big deal out of it. So I felt compelled to make this, to give a little bit of a foundational understanding of what's at play here. I've spent some years in private equity and then was an options trader over a decade ago. So I have an understanding, I guess, maybe more than the average person on the street as it relates to this topic. So I thought that I would just kind of break down exactly the who, what, where, when, and why of this and what's exactly at play, and then kind of how I see this turning out. Please understand this is not financial advice. Take everything that I say with a grain of salt. I am an analyst. So GameStop, GME, it's front page of New York Times, Wall Street Journal, CNBC. It's all everyone's talking about today, yesterday, and for, I guess, the last few days. And it revolves around not only the growth of GameStop and how they're doing phenomenal things in terms of switching it around with a new leadership team, with a previous CEO from Chewy, but also how the really popular forum Reddit is involved. So for those of you who don't know, Reddit is like at this point, a top 5 site, maybe on 6 or 7, but the founder is married to Serena Williams, and he did a great job of bringing people together in this really easy to use forum where you can easily put in emojis, and they have communities around different interest groups. So the one that's getting the most attention is WallStreetBets. And if I had to characterize the subreddit, it would be, young people that are enthusiastic about tech, about finance, about ways to do it intelligently, and get big movements on either side. So they do use a lot of options, and options are a tool where you can control a good number of shares for a small price. And usually you pay what's called an option premium, or a little bit more than what you would if you had to borrow it directly from a stock brokerage. So there's this thing called a meme stock, and on there people will do a meme about Blockbuster, for example, and Blockbuster, going under, the meme will be like, oh, I remember the good old days when it was, the biggest thing we had to worry about was be kind, rewind. So, that'd be like a funny little meme. And then in the case of GameStop, there's a lot of nostalgia associated with this company, because for many people in their late 20s, 30s, 40s, it was a good place where they would go and spend time on the weekends with their friends buying games, trading in games, and there's a lot of positive emotions associated with that. And then if you've looked at the stock, because of the prominence of Amazon and all the solutions online that can be delivered, next day, and are really inexpensive, the price went as low as $257. And as the analyst that I read actually calculated that to be about $23,000 a location, and those places actually do fairly well, especially on the pre-owned games, because they buy them for next to nothing and they're selling them for $5 to $10 a pop. And they do get a good margin from the new games as well, especially with the pre-releases and those promotions they get from Activision, Blizzard, and all the big companies that are trying to pump their game. And let's face it, we're entering an e-gaming era, and a lot of the people that are in blockchain are also have their foot in the door in e-gaming and all sorts of other new industries. So the meme stock that actually becomes the story, and that's essentially what happened. The growth of this subreddit has been astronomical. I think it was 1.7 not long ago, and now it's over 3. And I think even over the last few days, it went from 2 to 3, which for a Reddit, 1 million people is quite a lot. And I think out of those, a great many are coming to the platform for the first time. So that's exciting to see. But what has brought a lot of people to the subreddit is people are trying to profit off of the price of GameStop. So what brought it here? Well, it was a lot of short selling by hedge funds and people that are trying to use the actionable intelligence of everything's moving online and you don't really need to be in a palpable situation or hold on to games, or the brick and mortar aspect of gaming seems to be fleeting. So they thought that this is a good opportunity to go short on it and make a profit from when the stock actually goes down by borrowing it from retail investors. So essentially, for people that don't know about how short stocks work, you go in, and if through Interactive Brokers or E-Trade or Ameritrade, all these solutions, if you borrow even $1 against your stock holdings in the terms and conditions, you have to give the brokerage the ability to lend out your shares. And what that means is that, let's say a share is worth $100, and if you lend it out to someone and it goes down to $20, then they would just have to pay you $20 to get that back, because they would buy it back on the open market, and then that 80% difference or $80 difference would represent that arbitrage or that profit. So there's an interest rate to do that, which is usually 10%, 20%. It varies on a day-to-day basis when it's calculated, but unless you're a large trader or with Interactive Brokers or one of the larger ones that do offer some concessions to retail traders, you're not going to get any of that. So if you go on Interactive Brokers and you have an account there, it's really shocking to see how much of a return you could actually get from getting a piece of that short interest. And over the course of the S&P 500, of course, dividends constitute a great, I wouldn't say a majority, but a huge chunk of what the earnings are. And if people could earn more than the dividends for a stock by getting something that's, that you're interested in, it's going to, or you think it's going to go horizontal, but at the same time you could lend it out for that short interest and earn something from there, that's a really powerful compounding tool. But at the present time, the subreddit people have been doing a bunch of memes. One of them is, I like this stock. And, they'll do, I like this stock, I like this stock, and then just kind of like build that momentum. And then they'll do funny memes around it, and people are kind of rallying around it. So what people did a little bit of research on it, started with this one guy that did a pretty in-depth fundamental analysis of GameStop. And it showed that there's a significant short position on it. Actually, over 100% of the shares are being sold short. So what that means is that when you lend out a share, those people that have those shares that they were borrowing will actually lend it out again. So it's kind of hard to wrap your head around, but what it represents is that when it goes up, or when there's naked option selling and people want to cover their positions, they'll actually have to buy the opposite side. So these people that are significantly short GameStop are eventually going to have to sell it. And when you buy something, that increases the demand. So that further pushes on to the demand from the options traders and retail investors buying to the shares directly. And that pushes it up that much more. So at the present time, the short sellers, which are majority hedge funds in Greenwich, Connecticut, New York, that sort of thing, are $6 billion down on their short sale of GameStop. And there are a few hedge funds that are very vocal about they're not liking it. People wish being Melvin Capital, and he went short when it was double digits. And now that it's triple digits, he actually had to reach out to some of the larger hedge fund leaders, like Ken Griffin, Mark, and Steve Cohen, which are the 3 and 4 biggest hedge fund people in terms of net worth. So he really went into his Rolodex and was able to get bailed out, get that additional liquidity, and therein provides some of the friction that you see. A lot of the people that are on Reddit. These are normal people that are tech savvy but are also interested in investing, a lot of millennials, and they're looking at the bailouts from yesteryear, that started Bitcoin in 2008, 2009, and then with the stimulus and everything, they feel out of the equation with a lot of the bailouts. So they look at this situation of this hedge fund guy, lost 30% of the return of his fund because of this naked shorts position. And he has people to bail him out because they understand that he as an investor has some good long-term potential and can do another fund and get some sort of coverage that way. But I think it left a lot of people with a bad taste in their mouth regarding these hedge fund managers. So, and it also brings down the understanding of why do we trade and how do we arrive at the valuation that we do. So there's momentum trading, and then there's value investing trading. And for value investing, there's the Graham Dodd technique, or Benjamin Graham and Warren Buffett, I suppose I should say, where you're looking at how does this reflect its value in terms of the business. If I went to a business broker, Sunbelt business broker, and I looked at the financials of the company, and I'm saying, will I be able to get my return on a fairly short period of time? Will this actually increase in value? Is this a diminishing asset? So Warren Buffett is always big on taking a stock and looking at it as though it were a business that you own, because in Berkshire Hathaway, in his own portfolio, he just has the existing managers stay there and continue to build it up. And so, there's additional factors at play in terms of stock buybacks and dividends and things that are structured a little bit differently because they're all in C Corps. But it's an interesting way of looking at stocks, certainly not applicable to, let's say, 2000 dot-coms or a lot of the blockchain companies nowadays, or a lot of SaaS companies that are extremely growth focused. So having a valuation that is looking over the 10-year horizon of the company isn't really too applicable, because a lot of these will either scale or crash and burn in a few years. So you can see that the low over last year, and this was about 6 months ago, is 257 as opposed to the high, which was today, of 380. So anytime you're over 100x, there's a lot of volatility there. And in terms of the actual value metric, if we even go that route, there are some positive cases that GameStop could represent some value. You have the Chewy CEO that's on there and talking about how there's real value to be able to milk that existing good feeling regarding the stock, and that they can go a number of different ways with the popular website and with a lot of the popular tie-ins with e-gaming. So that has the potential to turn things around, and he's well-funded and has many contacts that are well-funded that could push things up and make use of their existing contacts within e-gaming. So I think that if you talk about the building up of the company, it has some real value at that earlier valuation of 23,000 location. These are some flagship locations that are in some of the best parts of town, some of the most used malls in America. I know that increasingly malls are used less and less, but still having those premium locations, those are signed under some very positive lease terms that have long-term value. And I think that there's a serious case for fundamental analysis, but really what's in the news nowadays is the actual momentum. Say flow over pros is one of the big calling cards on Reddit in terms of how does one invest. They see the upward momentum, they see that these short sellers are eventually going to have to close their positions, and they're like, how can I get a piece of that other side and hold on for the ride between then and now?